When you think of a 150-year-old heritage brand, you probably picture something slow, predictable, maybe even a little boring, right? Well, scratch that. Because as we're going to see in ADT's Q2 2026 results, they are operating less like a dusty relic and way more like a highly tuned transformation engine. Welcome to This Explainer. Let's get right into it.
We got to start right here with this massive number. $406 million, that is the adjusted free cash flow they generated in the second quarter alone. You know the old business saying, right? Revenue is vanity, but cash is reality. Well, right now, ADT is generating a whole lot of reality.
And what really blew me away here? That cash generation isn't just a slight beat. It's a staggering 48% jump from this exact same time last year. It marks a fundamental shift in efficiency for them. And honestly, it's the ultimate output of this transformation engine we're unpacking today.
So here's our roadmap for exactly how they pulled off this Q2. 1. The scoreboard. 2. Core business health. 3. Innovation in AI and DIY. 4. Rewarding the shareholders. And 5. Their upgraded 2026 outlook. All right, moving right into Section 1, the Q2 scoreboard. Let's look at the high-level financials that set the stage.
So the crucial takeaway here is that while top-line revenue saw a pretty modest 2% bump to $1.3 billion and earnings per share stayed perfectly flat at 23 cents, the underlying cash engine was just roaring. So how do you turn flat earnings into a 48% cash spike? Well, it all came down to running a much tighter ship. We're talking strict discipline over their working capital, a lower tax burden, and actually spending a lot less to acquire new subscribers.
Okay, on to Section 2, Core Business Health. Let's open up the hood and see what's really driving this cash.
You're going to hear this acronym a lot in the security space, RMR, or Recurring Monthly Revenue. This is that highly predictable, ongoing revenue coming from subscriber monitoring contracts. It's literally the absolute bedrock of ADT's financials, meaning they aren't just starting from scratch on the first of every single month.
And man, that stability really scales. We're looking at an incredible $4.3 billion in annualized RMR. Just think about the sheer power of that number for a second. It serves as the beating heart of their operations, giving them this incredibly durable cushion so they can confidently invest in future tech.
The core operating metrics driving all that RMR, they're holding super steady. We're looking at a stable gross revenue attrition rate of 13.1%. And actually, it's worth noting, this was driven slightly by non-pay cancellations, but that was totally offset by fewer folks voluntarily disconnecting. Plus, their incredibly efficient revenue payback period is holding rock steady at just 2.3 years. On top of that, their net cash subscriber acquisition cost, or SAC, dropped 7% to $345 million. That drop is a direct result of disciplined spending and backing off on bulk account purchases.
Which brings us to Section 3, Innovation in AI and DIY. This is where they're really leaving that legacy label in the dust.
Their recent Origin AI acquisition is a total game changer. They now have the ability to literally see human presence using nothing but ambient Wi-Fi waves. It detects movement by picking up on disruptions in the Wi-Fi signals that are already bouncing around your walls, meaning zero new dedicated sensors needed for those specific zones. It's kind of mind-blowing.
This is just a massive paradigm shift for the industry. Look, traditional security relies heavily on high-friction wearables or sticking intrusive cameras in every single room. But presence sensing, it's completely invisible and it's privacy first. This is the perfect solution for folks who want cutting-edge security, maybe for themselves or to keep an eye on aging relatives, but absolutely hate the idea of living inside their own reality TV show.
And this brilliant tech also fuels their other massive growth vector, the DIY market. By launching their sleek new ADT Blue hardware on platforms like Amazon, paired with instant smart alerts, they're bringing pro-level trusted security straight to the modern, value-conscious consumer. It gives you the ultimate convenience of self-installation. But here's the genius part. It creates this clear, organic path to convert a subset of those DIYers over to their professional monitoring services down the road.
All right, Section 4, Rewarding the shareholders. Let's see what happens to all that cash they're throwing off.
Let's dive right into this figure. ADT returned an incredible $684 million directly to its shareholders in just the first half of 2026. So they aren't just hoarding cash, they are systematically pushing it right back to the people who own the company.
It really creates this virtuous cycle of value creation. First off, they're returning predictability via aggressive share repurchases, and they still have over $900 million remaining on a massive $1.5 billion authorization. Second, they're paying out a steady quarterly dividend of 5.5 cents per share. And finally, they're seriously de-risking the balance sheet. They're aggressively paying down debt to push their net leverage well below their 2.5x target. They're basically funding high-return growth while keeping the financial foundations totally bulletproof.
Okay, bringing it home with Section 5, the upgraded 2026 outlook. With a humming engine and a clean balance sheet, let's see where this vehicle is heading next.
Based on the sheer strength of that Q2 performance we just walked through, management went ahead and upgraded their financial guidance across the entire board. While total revenue and adjusted EPS were previously expected to just stay flat, they're now projected to be up roughly 2%. But the absolute standout, the bottom line. Adjusted free cash flow expectations jumped from an already impressive 20% increase to a massive 30% surge for the full year.
Looking at their incredibly efficient cash generation, their disciplined capital allocation, and their leap into entirely invisible, Wi-Fi-based AI sensing technology, well, it begs a fascinating question to leave you with. In the age of modern tech disruptors and Silicon Valley giants, is the smartest, most cutting-edge home security brand actually a 150-year-old company? The numbers certainly make a compelling case. Thanks for joining me for this explainer, and I can't wait to explore more fascinating transformations with you next time.